Welcome back, everyone. Today's topic is something everyone has dealt with at some point or another: deferred interest. But before we get into it, don't forget to subscribe. It's a free way you can show support for the channel. Okay, so picture this. You are sleeping peacefully, dreaming of life on the beach, when all of a sudden the support on your beds gives out and you wake up in the disaster. At first, when assessing the situation, you think, I just need new supports. But then you realize that the way it broke cracked the bed frame, so they need to be replaced as well. The next day, you head to the furniture store, where you are overwhelmed by options. You narrow it down to a few that can be delivered the next day, but are worried about the added expenses. This is when the salesperson tells you all about their financing options and how they are at 0% for 12 months or longer if you need. You get very excited because you can pay off this sudden expense slowly. The salesperson upsells you the entire set and you agree to finance the cost. When the first bill arrives, it states the minimum payment is just $81, which is less than you thought, and start making those payments right away. After 12 months, the 13th bill arrives, and you notice the total balance has increased drastically, and you owe a lot more than you started out with. You call the number on the bill and they let you know that the interest was deferred for 12 months, and since you did not pay it off in full during that time, now the interest has been added to your balance and will continue to accrue interest until it is fully paid off. This is a story that repeats itself every day across the country in different ways. It can be in retail, buying clothes, online buying, let's say you're getting a new vitamin blender, or buying souvenirs for a party. Deferred interest payment options have skyrocketed and are an option no matter where or how you're buying. It is important to fully understand how they work and how to avoid being a victim of the accumulated interest qualifying to be a part of your balance. First things first, the salesperson rarely explains fully how these financing options work. A lot of times they don't even fully understand it themselves. So ask a lot of questions. Make sure you know before you apply how long the deferred interest period is for specifically. Why ask it that way? Well, the deferred interest period sometimes is shorter than the time frame you have to pay off the entire balance. I know someone who bought bunk beds and originally was going to buy them cash actually, but was convinced to finance them at 0% to build credit. What was not told to him was that the deferred interest period was only 3 months versus the maximum time frame to pay off the balance was 24 months. On 3 months and 1 day, he got the notification of the balance increase. He called to figure out what happened, but it was too late. He now could only just pay it off as soon as possible to avoid accruing further interest. So make sure you are clear on how long the deferred interest period is for. Next, when the first bill arrives, do not pay the minimum payment listed. I will repeat, do not pay the minimum payment listed. If you are trying to really just pay the balance at 0%, you must divide the total balance by the number of months you were given with deferred interest. I personally like to subtract 1 month just to be on the safe side. So as an example, a purchase of $1,000 with 12 months deferred interest would require monthly payments of $90.91 for 10 months and $90.90 for that last month for the total of the 11 months. Some companies which have been sued for the predatory practice of not disclosing fully the real minimum payment needed to pay off during the deferred period have started to show multiple options of how much to pay. But it still can be confusing because they also add long-term payments, like if you spend 5 years paying it at the interest rate, how much you would pay total. So it is always best to do the math yourself and trust your number. Don't fall for the bill that says you only have to pay $40. So the good? This is a great way to spread out unexpected expenses or large purchases in general so they don't break the bank. The bad? This is a great way to fall prey to the upsell of salespeople looking to make commission. So do not spend more than planned just because you can spread it out. Stick to your plan. Only buy what you need. The ugly? Not all salespeople, or lending companies for that matter, are created equal. You must advocate for yourself and ask all the questions. Do not say you understand if you do not. And do not be embarrassed to ask them to explain it again. They want their commission, so they will explain it as many times as needed. But at the same time, they want to move on to their next commission as well, so they'll try to rush you along. So if you feel that they're not doing a good job explaining, ask for the manager or go to a different store. The competition is always waiting. Let me know in the comment section below any stories you have heard or experienced with deferred interest. Share this video with family and friends so they're more aware of how it works. Together we can make it happen. Also, let me know other topics you want to hear about. My goal is to continue to share tips and tricks I have learned over the years so we can help each other out. Thank you so much for watching. Hasta luego!